We now bring on board Harendra Kumar, Head of Institutional Broking and Global Research with Elara Capital. Harendra, morning. Thank you for joining us. After 22% appreciation this year, what exactly are you advising your clients? Are you advising your clients to book profits or enjoy the momentum?
I think we are advising clients to kind of pay their positions and probably clean up their books, in terms of the sector rotation they should probably doing in the current year. And that is pretty much what our interactions with fund managers are telling us, is they are probably, from their overt stances are probably going neutral, and they are looking at the market very cautiously at this given point of time.
And why exactly are you advising your clients to exercise caution? Do you think valuations are looking stretched?
There are two or three things here, Nikunj. One is that the market has given such 20% rise over a period of, two bear phases in the Indian market from 2000 to 2000. So we've seen sharp rallies of 20% which have not sustained. I think after the run-up now, I think the risk-reward trade is currently not in the favor of investors. If they want to enter at this point of time, the chances that the market could correct another 10% from here on, it could be a technical correction as well, but that could hurt them in the short to medium term. Then we are getting into the budget. Clearly, the run-up has been, so it's event risk to the market and the UP elections. So the odds are stacked against, entering the markets now. So, it all in all tells us that the market could take a breather or pause, maybe not a sharp correction, but yes, it could consolidate here for some more time.
Harendra, which to your mind is the strongest Nifty 50 stock?
Currently, it is ICICI Bank.
Why do you like ICICI Bank? Because if I look at what they've reported for the quarter gone by, NPAs were high and NIMs were coming under pressure. ICICI Bank also has a large exposure to KFA.
See, I think overall in the perspective, what the market is perceiving in the banking space is that, HDFC Bank is slightly run up ahead of its fundamentals and valuation, and there is huge comfort on the private bank space for ICICI Bank, and the strength is, kind of reflecting that confidence in the stock. The capital adequacy is very strong going into Basel III. The book restructuring is as per strategy. The CASA is robust. So I think all in all, they have indicated that ICICI Pru will continue to pay dividends. I think from here on, with the interest rate cycle turning and a proper environment, there is significant valuation upside even now left in ICICI Bank. And I think that will to continue to do better as compared to other peers in the private space or the public bank space.
Harendra, what is your house view on ONGC? The e-auction day for ONGC is 24th of Feb, which is Friday. Ahead of e-auction, do you expect ONGC is a buy?
No, actually, we have a reduced call on ONGC. I think up to the auction, the stock might likely remain firm. But our view is that with the crude firming up and under recoveries, the higher share of burden will fall to upstream arms like ONGC. I think after the event is passed, it will probably be consolidating or heading lower as compared to the overall market space. So I think you have better trades, in the oil and gas pack such as Kane over ONGC that can create, incremental alpha for you over the medium term.
Harendra, why is State Bank of India moving from strength to strength? They came out with poor set of numbers. They have a large exposure to airline stocks. They have a large exposure to Air India. They have a large exposure to KFA. The news this morning is that they have backed Kingfisher Airlines further.
There are two positives for the banking space. One is the interest rate angle. People are anticipating a CRR cut as well as trying to preempt a rate cut and trying to be ahead of the curve. So I think there could be a negative surprise there, but the positive surprise has been in terms of the general policy angle. The PSU stocks are reacting more to policy announcements, like coal, on the power side. So people expecting an infrastructure that these areas will start to chug along and recover, and probably the NPA overhang would probably be out of there, and the valuations were looking extremely cheap. So these two positive levers are working in favor of PSU banks and the beta trade. So I think issues like aviation losses and in banks like large firms like SBI, these are very minute, and they tend to be overlooked when the sentiment has turned. I think that positive sentiment is there in bank PSUs as overall index and as leading stocks. So I think this momentum will continue till probably this trigger starts to come off a little bit. But there's no point in actually trying to worry about smaller things when the large liquidity is chasing interest rate sensitives.
Harendra, just want to get you in on the MCX IPO. I don't know how much you track this month, but do you think this can really revive the primary market, A, and B, eventually turn out to be a portfolio must-haves?
Yeah, see, I wouldn't, it will be too premature to say whether it will be a portfolio must-have, but yes, I think it does a lot to the equity markets. There is a good liquidity sentiment in the market now, given the markets. Plus, we have the disinvestment program that is also, again on the radar of the government. So you have ONGC, you have MCX, and a couple of other disinvestments, and it could do a lot to what it did to our markets in 2003. So all in all, it's a big positive for the markets.
Harendra, if the Anil Agarwal group or the Sterlite group indeed, indeed they merge Sterlite Industries and Sesagua, will that destroy shareholder value or will that create shareholder value?
Not sure whether it will create shareholder value or destroy, but what it does, it definitely upsets the way the fund managers look at these businesses. I think Kane was a pure play energy story, Sesagua was a pure play mining story. Now you have all in one, and you don't have exclusive place to invest in the Indian market space. It is also typically fund managers don't like so many restructurings to happen. 2008 was again a case in point where Sterlite had to go slow on its overall restructuring exercise. So I think it leads to a lot of ambiguity in the way they perceive or would want to invest in individual names, and I think that will probably be an overhang on the stock.